Against, that's carried. Just noting the declarations of interest for myself and Mel on the CCHL items today, and then the confirmation of the previous minutes, so I'm happy to move those. Mel's happy to second them. All in favour? Against, that's carried. David, there's no public forum or deputation, no petitions, so that leads us to Peter Ryan's report. Do you want to come up to the table, Peter?
Right, good morning everyone. This is reasonably steady, but there are a couple of things worth just having a quick overview of. Starting with levels of service, we're up. This reflects, I think, a lot of focus from heads of service, as well as from the team working with them one-to-one. We've had a lot of one-to-one work, and I'm happy to say that they're trending up. It's very hard. You get diminishing returns after about 85%. It's hard. But we're at about the highest level we've been in the last 5 years. So even if we lose one or two between now and year end, we're still looking pretty solid. The next one would be capital. Capital project delivery is down a little bit, but I would say we're entering the busy period of the year. Nikki's report will go into that in more detail. But yeah, late summer, autumn is quite a busy time, and you may see some changes arising from that. The capital planning targets feeding the pipeline for March and June are both on track and look pretty good, and they're confident in reporting that they'll go. Mr. Chair, yes, sir. I do for the overall report.
Yeah, can we just do what we normally do and get...
Sure.
Yep.
Value for money, look, we're fine overall. The activities will net out, but that still doesn't solve the problem that some activities are not on track. The finance team is doing work with those individual activities to check if it's an unusual issue, a budget problem, a planning problem, what's behind the individual circumstance, so that we can bring that back on track. Capital expenditure is on track. And look, that's really the highlights from this. There is some additional detail, but I don't think it's worth line by lining because it's not different from previous months. So that's the highlights.
Excellent, thank you, Peter, and that's a really good report and good to see that movement. Tyler.
Hey, Peter. Regarding the value for money part, pointing to page 15, which is demonstrate value for money by actively managing activity budgets through ELT. Yep. You said that you're going to come back with more detail on the number itself, or do you have some at the moment?
I'm sorry, I don't quite understand.
I'm just wondering why it's 79.5%.
Okay. The activities are planned out in the LTP, so these will be the budgets you signed off back in June.
Yeah.
Some have variances, like, for example, the Three Waters ones show variances, and that's due to spend on maintenance and renewals. Gavin's working with his team on why that's over, but it's basically to meet levels of service. So each one of these will have a different reason, and that's why the finance team are working with the manager individually on how do we get these back on track, or is this fundamentally that the budget wasn't set right in the first place?
I see.
Gavin's comments on some of those Three Waters ones are that the budget wasn't actually set quite right. So overall, if you play the usual corporate game of overs and unders, they net out. Like we're actually in front here. We have a surplus, but we're looking at those ones that are overspent to figure out why and what we can do to correct it. Gotcha. So balancing over and under is two wrongs don't make a right, you know?
Yeah, of course. No, that's great. Thank you so much.
Great, thank you, Peter. Anyone else on this paper? No, the Mayor's happy to move it. Mel's happy to second it. All in favour? Against? Carried. Thank you, Peter.
Thanks,
good report, as always. Russell, do you want to come up for the finance report, please?